And one of the biggest problems facing traders is self-created. It's the tendency to focus efforts on a sole area of expertise within trading. Now, this could be a certain type of setup, money management techniques, or even trader psychology. But while mastering one of these is likely to be pretty useful, each one on its own is just one of the cogs in the trading machine. In the same way, price action is not the Holy Grail, and here's why. Number one, what's the trading Holy Grail anyway? Now, the trading Holy Grail, if it even existed, would be a system, strategy, or method that always produces results no matter what. It'd be easy to interpret. It'd be easy to implement. It'd be easy to make money with. It would work across all types of markets and all types of market conditions, and it would be great for small and large accounts. Now, of course, there are some things that might be viewed by some as coming close, but I can't say that I've come across something which meets all of the above criteria and is foolproof. In any case, let's face it, if you presented a group of people with a great strategy and all that they needed to be successful, most of them would still struggle to make it work without any guidance. In short, the trading Holy Grail doesn't exist. Number two, price action is happening all the time. And the thing is, it's happening in all places too, not just the places that might be relevant to you. So if you focus solely on price action, you'll end up taking in a great deal of what some would call noise. This can lead you to taking less than optimal trades at less than optimal prices and times. Now, on its own, price action can convince you of your feelings about direction, but it's just not enough for consistently profitable trading. And just like any other form of technical analysis, it doesn't tell you what will happen, just what might happen. Number three, aligning yourself with a higher time frame participant is always beneficial. It's something which traders strive to do, even to the extent where people develop specialized approaches for detecting them. You see, higher time frame participants are generally much larger and tend to initiate directional movements in the markets. You get on the right side of this, and clearly there's going to be the opportunity to make some money. The problem with price action is that it has the potential to draw you into the smaller and smaller time frame. But whichever time frame you're viewing the market in, it's very difficult to look outside and over a bigger time frame of this. This is because price action can change relatively quickly, and you won't want to miss anything. But if you're not careful, you'll miss what the higher time frames participants are doing. Number four, getting sucked into the market when there's no real reason to trade is one of the biggest plights of the day trader. And price action can easily do this to you if you're dependent on it alone. Seeing markets that are moving quickly and maybe look like they're about to present a great opportunity, even if you're following price action rules, can get you to take some pretty dangerous trades. Think of when there's higher volatility than normal. Can you justify the increased size of stop you need to let a trade play out? Do you have the ability to balance the added risk by reducing size? And are you actually doing that? Number five, it doesn't help you with trade execution and management. Whatever the price action is telling you is more likely to happen. It doesn't necessarily help a trader to manage a position effectively. Money management, of course, can be supported by price action changing the unfolding picture. But the fact is that a big part of adjusting a position's target and stop orders, rightly or wrongly, comes down to how far price moves relative to the position itself. Think about the case of a trailing stop as an example. The stop can be hit without price action dictating that a change has even occurred. Moreover, what price action doesn't do, and perhaps for some will do the opposite, is help a trader remain calm and follow their trading plan. Sticking to your game plan can be the difference between making a success of trading and not. However, all of this said, although price action isn't the Holy Grail, price action is a very important piece of the puzzle if you're using it as part of a holistic approach. Understanding it with context and an understanding of what markets tend to react to in terms of price can give you a much better idea of the relative short-term direction a market is likely to move in. Now, even with this, you still need to have a solid plan, a good strategy, trade management techniques, manage your emotions, and so on.